Thought I'd do a surprise live session today. Um, Markets are kind of selling off, and we're seeing some weakness in a lot of stocks right now. So I wanted to cover this, and I felt like this would be a really good time to kind of just see what's going on in the markets. So yeah, this was kind of a surprise one here. And I have a webinar scheduled with my members today at 8 o'clock, and I wanted to do a little bit of a session here to about 7 o'clock. So I wanted to see what's going on. We just recorded a video yesterday on Tesla and what we think is going on with that. And we've seen some weakness in Tesla, which is kind of surprising. And we're now starting to see some weakness actually in the markets. And so I kind of wanted to get into that, talk about some of this. I'm seeing some really interesting stuff in the price action of Tesla right now. So looking at the time in sales, you can see there's a lot of single share orders going through right now. And, this is pre-market. Single shares is even double print shares. So single shares, double digit shares. Those are retail traders. This is a lot of Robinhood traders that are dumping Tesla right now. And they're dumping it in pre-market. And keep in mind, Tesla is off of its highs. I think the highs were, if we go back, let's go to daily. So the high was 1794, just shy of that. And so we are seeing a lot of selling happening right now. And you can just see as we're going through this, the majority of this is all single shares. So Robinhood traders have taken a very prominent role in the market as of late, and they have been pushing around stocks that they are heavily concentrated in. And Tesla is definitely one of them. Tesla was, if I'm correct, looking at robintrack.net, it's one of their most widely held stocks. So it's the eighth most widely held stock. And yeah, eighth most widely held stock of all Robinhood traders. And as Tesla's been selling off, they've been adding positions. And we talk about this in our video coming up on Sunday that we've already recorded. Also, in terms of popularity changes, Tesla is, over the last 24 hours, the number one most accumulated stock. So over a 24-hour period, they have accumulated more shares of Tesla than any other stock out there. They have accumulated 23,000 shares. And so, when I look at that, and it tells me, normally Robinhood traders are pretty good at tracking Tesla. They've been doing a good job at it as it's been rising. They've been buying it up. But lately, as it's been selling off, there was the big sell-off, but then they paused and have been accumulating a lot of positions since then. So Tesla to me seems like it's in trouble. And I kind of want to get into that. And so we had actually recorded the video when Tesla at market close was 1524, and it's now already over $100 down. So to me, this is kind of bearish. In fact, technically, I think with 1794 being the high, we might actually technically be in a bear market. So if there's 20% down, let's see, what is it? 1416. So minus 1416. So divide that by 1794. Yeah, we're down 21%. So we're technically in a bear market right now. And keep in mind, this is on the heels of some really good news that they had they had another quarter that was profitable, their fourth in a row, which gives it eligibility to be possibly included into S&P 500. And so on the heels of that, every single positive news catalyst that had been coming out on Tesla had just been a reason to scoop up the stock in a massive way. And this time, with the positive news announcements, we're not seeing any. We saw a brief spike after hours, but then it's completely faded by the next session, and it's already well below that. We are at the lowest prices we've seen since the 13th. So let me pull a little some of my tea here. Tesla's looking like it's in trouble, and keep in mind, considering how parabolic it was, this could be something that's going to be unwound very heavily. And if he does, it's kind of in trouble, because other than this kind of structure right here, because of the fact that it jumps so rapidly, there isn't a whole lot of order flow in history here, and that tends to create a liquidity vacuum. So because there's not a whole lot of history, there's no like double tops or anything like that, or it didn't spend a whole lot of time there, you don't have a lot of reasons, technical reasons for players to get in at those prices. So it tends to, when you have these big pull-ups like that and then sell-offs, this rips like this and then a sell-off, because there's no liquidity and order flow at this area, it creates this kind of vacuum that just pulls price through it. So looking at Tesla, I am definitely seeing something that is struggling right now. If it loses 1316, then we could easily see this unwind to the mid 1000s. And that would be a massive loss for the stock, as there were just calls for all kinds of things, 2,000, 2,500, 7,000 price target, and a lot of Robinhood traders, 40,000 in the last few days, have gotten involved in the stock. After the market did this and sold off, from this period on, from the 13th on, about 40,000 Robinhood traders had built up new positions in Tesla, expecting this to go to Alpha Centauri or whatever it would be the next moonshot price on it. But that hasn't happened. And it created a nice little double top here and sold off. And this looks pretty weak. This is not a favorable position. I don't see anything good in the price action. It just rolled over, brief bounce, and then is just barely holding on to this 1410. And we're seeing this weakness play out in several markets. Europe right now is also all in the red, and not mildly. You're talking strong amounts, 1.3, 1.7, 1.5, 1.69%. Asia all in the red, with the Hang Seng Index down 2.2%. The others are mild, but we're already seeing the ES show weakness. So the ES is looking weak. Tesla's looking weak. QQQ, which is the NASDAQ ETF, is also looking weak. Now, granted, the S&P has not, the S&P 500 has not really broken any major structures yet to the downside. We have this important corrective structure that it had been able to recently break out of this week, and now it's back inside that. And so we haven't had a close below the, this is the monthly VWAP here since the end of June. So we haven't had a weekly close below that, but I think if it were to close back under 31.79, then that would put 31.24 back into context. And possibly if it loses that, then we can be talking about 3,000 again. So the S&P is still holding strong, but tech is looking a little bit on the weak side here. So we've already had 1 week of bearish close, and now we are potentially threatening a second week. So it tried to rally intra-week and has since sold off, and it's not far from the bottom right now. So tech is, been the leading kind of indicator for a while. And if you were to take out the FAAMG stocks, you're talking the S&P 500 would not be where it is right now. If you were to take the top stocks away from it, it would not be where it is right now. It'd be much lower. And so tech has kind of been, Amazon, Microsoft, Apple, Facebook, they've all Google, they've all been really kind of pulling the indexes higher as they've been accumulating for or accounting for a lot of the gains. But now tech is weakening. And so, this is now we're kind of creating a corrective structure at the top here. So we kind of got this inside the weekly. And if we go to the 4-hour chart, we can kind of see this is where we are right now. So this is your base support, classic double top. And this is going to be challenged next. Below 252, you got 250. And then you got, 246. But if it loses 246, then I could easily see it finding its way down to 239. And that would be the first time we've really lost significant ground. Also, this is the largest corrective structure in this entire move up. And so when you have large corrective structures at the top of really long trends, that generally means there is more two-way order flow because the sellers have been able to push back and thus create that wider corrective structure. And so, that means not only is there greater presence of two-way players, but there is the potential for distribution from the longs to distribute to the weak players and the late players. And while they exit, the institutional smart money exits early, distributes to the weaker players who think the market is going to keep going up, and then they sell off. I don't know if that's happening right now, but the structure is suggestive of that. So that's kind of what I see going on right now. Just looking at some comments here. Hello, Sashin, to you. Trisha, my issue isn't analyzing the charts. Well, you come to the right place. It's one of our specialties is in analyzing the price action context. So if you want to learn to analyze charts, then you have to learn to read price action context, and you have to be able to do that in real time on multiple time frames. And so that's a skill that you need to build up, but it is a skill you can build up for sure. Reddy, nice to see you as well. Sasha, have you posted in Discord as well to everybody? Just want to make sure the link's been posted to everybody and they know in all the different channels if you can. So that'd be awesome. So yeah, seeing some weakness across the board. I'm probably going to start taking some profits on some of my stock positions, maybe even start looking for protection on some of the positions, or look to start shorting some stocks. I've pretty much been mostly long biased since this, amazing run in the S&P 500. I've been long biased for a while with only a few random stocks I've shorted, but I might start, depending on how things close this week, I may start looking for protection towards the end of the week, winding down some of the long positions, keeping the strongest ones, and then looking for some potential short plays. So that's kind of what I'm seeing right now. Bessie is saying, nice to see you. Good to see you as well. And good to see you, Reddy, as well. So I haven't heard from Sasha, so I don't know if he's posting everything, but I hope he has. So that's kind of what I'm seeing in the markets right now. When I look at some of the stocks that have been really strong as of late, DKNG had a pretty impressive rally. Right now, it is pulling back a little bit. It tried to get to 40, but just couldn't. However, this is a pretty good bounce. Pretty good bounce off the bottom of the 27 support, which we had talked about in the past as being a great roll reversal level and a great area to buy. So the market has definitely bounced, but there's some profit taking from people who are long on this. And so now we're in this kind of corrective structure with some weakening. I was supposed to click. So here's where we are right now. And so this corrective structure here became the floor of this corrective structure. And so if we get a weak bounce or a lower high that doesn't make it as high as this, then it could lose this corrective structure. And then it's going to start to test 32, 30, and then 27 again. So, yeah, just seeing weakness in several different positions. Right now, Sono, which has been a pretty decent stock, I'm long the stock right now, is pulling back a little bit. It was yesterday. It had hit a high of 1783. We are now $1 below that. Trend is still pretty strong on this one here. As long as it holds above 16 and 15.19, then I think it's okay. But I think if it gets below that, then it has kind of a last basis support at 1420 and then nothing down until sub 13. So I might take some profit on this one here. Space, which has also been a very strong stock as of late. They had announced that they had hired an executive out of Disney to kind of take over the company and start running things. And that created a lot of bullish momentum in the stock and made new multi-month high. So they announced it, breaks out at 20, went all the way to 27.59, and now it's pulling back a little bit. So I will consider getting long in this, but I'm going to look for a deeper pullback since I'm seeing weakness in the market right now. And I'll watch 22, 23, and 2072 as some potential locations on this right here. He's saying he did post in all the channels. Okay, gotcha. Bassi Ekpa is saying, does large corrections in an uptrend cause a change in the order flow? Large corrections are changes in the order flow. They can cause it, but they are themselves changes in the order flow. So when you see a large corrective structure at the top of a move, especially a trend that's been going on for a while, sometimes when you have a distribution where people who are already long are going to start unwinding some of their positions. And so when they do that, they will often do it to latecomers, weak players, and things like that, smart money offloading to dumb money kind of thing. And so that the large corrective structure in and of itself is a communication that there is a change in the order flow, especially if you haven't had any large corrective structures to begin with. So for example, we can look at QQQ. We haven't had a large corrective structure like this that had held since about a month. It's been all of July that QQQ has been stuck between 252 and 269, especially with a double top. All the other tops were, just continuing to make new highs. Top, new high, new high, new high, new high, new high. It just went on and on and on. Now we're seeing an actual corrective structure and double highs. So it's not able to make new highs. And then some pretty aggressive selling once we hit that double high. I mean, this sold off over a period of few days this week. It has lost everything that it held and maintained since the beginning of July. So large corrective structures are representations of changes in the order flow. And because of that, they can also often communicate that there is a potential weakening happening and thus can cause the order flow to change as well. So it's a both. It's a both and. Like a reversal. Yeah, there's certainly the potential for that. And this structure in of itself is not necessarily bearish, but taken in the context. Like if there had been other corrective structures like this, there's one of similar size lower and then lower, well, then that would be a very different scenario. That would mean that the market came up and then it stabilized for a little bit, built a corrective structure, built a new ceiling, and then used that ceiling as a floor to move forward. But it didn't have that. It just kept running. So it never really built a serious floor in that process, nor a double top resistance. So there are some kinks in this chart that, if this was to reverse, some of the early signs already present, very massive selling off of 269 the first time. Double top aggressive selling erases a lot of days of gains. Largest corrective structure inside this entire bull run. On top of it, it's at the top of the move. So, and then weakness intraday showing signs that there is pressure on the stock or in this case, the ETF right now. So there are kinks in the armor and more kinks than I have seen since this entire run. So yes, we're definitely seeing some of that. Good question. A couple others. Let's see. Big, this is stock I'm long. It's down from its highs. It's holding a little bit better. It's not showing as much weakness as, say, the QQQ or Tesla is right now. But yeah, Tesla's looking really bearish. Wow, this is just continuing to break down. Yeah, if I had to speculate, I don't think this is going to hold. I don't think this is going to hold this session. I think there might be an attempt, but it's looking very, very bearish. What's going on with the... Yeah, you see how there's still just a lot of single share prints, single share, double share prints. Those are small accounts. Those are, and they're singly. It's not even single share, single digit. It's single shares. One. Who would buy and sell one share of Tesla? You're talking small retail trader accounts. Robinhood traders and things like that. They could only afford one share. That's why they're unwinding one share. Maybe they have 2 or 3 shares, but this is telling you that there is a lot of retail traders that are starting to unwind this. Only until you start getting into the triple share digits are we talking about more professional traders, because they can have the margin and the size of the account to do that. There's no professional trader that's just dumping one share of Tesla if they're already long Tesla. So we have a video coming out on this Sunday. It's already recorded. We're just doing final edits right now, but talking about our views and different ways to trade it. But looking at this is not a good sign for Tesla. If Robinhood traders have been a big part of why this stock has been held up, and that's, there's many reasons why it's been held up, but if that's one of the cases and we're seeing them dumping it left and right, well then, then it's in trouble. Yeah, I think it's going to fold this right. Yeah, it's already folded it. So as I suspected, this is not good. This is not good. I am willing to bet options right now are also increasing in price massively. In fact, I wouldn't be surprised if the QQQ loses 252 today. But option prices have already almost doubled to protect long positions in the indices right now. So if somebody wanted to buy a put, or they wanted to buy protective hedges on the S&P 500 or Tesla or QQQ, those options have almost doubled in price from yesterday. That means there's a lot of traders that are scrambling to buy protection. And so the same strike price and the same expiry date and the same option is now twice as expensive as it was yesterday. That means that there's a lot of people that are levered along on QQQ, on Tesla, on the S&P 500. And if you're levered along and you see a little bit of a drop, that means a big drop in your P&L. And so if you want to maintain that long exposure, you're going to have to start buying protection right now. So QQQ is looking very, very weak. Now, granted, this was a very strong double bounce. In some sense, I hope it does bounce a little bit, because I would like to sell it higher up. But it's looking very, very weak right now as the market opens. Okay, so Sashin, you know the rules, right? You've been to a few of these. If you want me to look at a particular currency or stock or instrument, um, instrument, time frame, if you're long or short, if you are long or short, what are your current entry, stop loss, and take profit, and one sentence description on what you think the price action analysis is. Just one sentence description on it. So, okay, good. So we got some dip buyers. This is not surprising. This is a very important line in the sand for Tesla. This is a huge line in the sand for Tesla. Yeah, this is a very important line. It has to hold 400. If it closes below 400, then that puts 1374, with some meat of this corrective structure. And then the floor of this corrective structure is 1313. So to put that into focus, and that's if it loses that. If it loses the 1400, then I'll put these in focus. If it loses this, then Tesla's in trouble. So what else? What's happening with S&P 500? Still under pressure. Okay. DKNG under pressure. So a lot of stocks that were strong under pressure. Sonos holding. I hate that it does that. It's the one thing I hate about TradingView, that when I switch across charts, it gives me an alarm for each chart. Now watch, I can hit this and beep and beep. Oh, wow. It didn't do it. So this is actually one of the stocks that's strong today. They had a patent challenge from Moderna. They had actually submitted a patent for technology to help with the vaccine for fighting COVID. Moderna challenged it. They lost the challenge. So the stock has been very positive on the news. It's just gone gangbusters. Even in pre-market, it's already up. What is that? 60% roughly right now. So this is a stock I may consider getting long today right now. But yeah, I'm probably going to start unwinding some positions here. So okay. So let's see. I've covered pretty much what I want to. Happy birthday in advance. Thank you. I appreciate it. It was 17th, so that was my birthday. So Sashin, do you have your time frame analysis? Just one sentence description. Do you have all that done so I can do some Bitcoin while I'm at it? I didn't mean to do that. Let's get a PA main chart, which we'll need for that. One thing we should be looking at. Let's take a look at some. Let's take a look at gold stocks. So precious metals are one of the things that I still want to keep long exposure to. I think they might see a dip, but overall they're looking good. What else? Let's see here. Let's go to XAU USD, and which I think is going to hit the. All-time. Yeah, it's already there. Yeah, we felt like it was going to hit the all-time highs this year, and it's pretty much there. Yeah, the all-time high is right around 1920. So I think gold's going to hit it. I think there's going to be some profit taking once it does. And then once that's done, I think you'll see a pullback. But then I think we're going to hit 2000 on gold this year. I think gold is hitting 2000. There's just too much interest in supportive conditions and reasons for people to want to get long PMs, especially with the gold, with the Fed just printing money and just buying bonds hand over fist. They're basically monetizing, bonds at this point. So when you look at that, I think gold is there might be a brief pullback at the all-time highs. Of course, some people that are long are going to take profits, short, medium, long-term players. But I think that we're going to rip through that and we're going to hit 2K before this year is over. So that's kind of what I'm seeing on gold right now. And so I will continue to maintain gold exposure. I may reduce some of my positions, but I'm definitely going to be maintaining gold exposure until we hit 2000, basically. So that's kind of what I'm seeing on that. All right. Sashin, you don't have none whatsoever? Really? It's just a one sentence, long, short time frame. Am I saying your name right, Sashin? I hope I am. Okay. Anything else? How much time do I have? Okay, I got a little bit of time. So we can do open Q&A right now in terms of charts. And so if you want to look at a currency pair, or you want to look at a stock or an index or anything, need the instrument, time frame, one sentence description, and if you're long or short, we need the details. So Why are you so shy? Why are you so shy, Sachin? Why so shy? You wanted me to do some analysis on Bitcoin. I'm happy to do it, but just gotta do it according to the way we have it set up. Okay. Let's see here. Gold. What else do I want to cover? Let's see what's going on. S&P. S&P is under pressure. INTC. So no problem, Simon. You just have to instrument, time frame. You want me to analyze it. One sentence description, bullish or bearish. So if you want me to analyze anything, no problem. Instrument, time frame, one sentence description. That's how this rolls. What's going on? S&P. Yeah, QQQ. Wow, this is looking very, very weak right now. It's just rolling. This is rolling over right now. I had almost taken. That's the funny thing. I'd almost taken a short option play on QQQ when it did this bounce. I had seriously considered it, and I kind of wish I did. I was looking at a bear call spread. So bear call spread is where you buy a deep out of the money call and you sell a closer at the money or near the money call. And so you sell one call, you buy another. It's a credit spread. It's a vertical credit spread. So you collect a credit just for writing the option. And if the market closes below the lower call, then you keep the full credit and premium on it. That was at 261, and here we are at 252. So I don't think I can write that option. Being a lot less expensive and a lot less payout right now. But yeah, I was kind of hoping for a bounce in QQQ. In some sense, I would like it to hold this right now, which I don't think it is. I think we're going to break through this maybe even during the session right now. But I really wanted to write some options on this yesterday because I felt like things were rolling over. So NTC, the buy the dip here. So yes, Simon Muzib. Again, instrument, time frame, you want me to analyze it, one sentence description. So you have to put those three things for me to analyze any particular chart. Yeah, we're breaking through right now. Tesla's, as we suspected, Tesla is now through it. This is not good. Let's check in with the order flow and see what's going on. Where is time and sales? Wow. Okay. So why is my thing not showing the price? That's weird. Normally it highlights the price. A lot of single and double shares. So a lot of retail traders unwinding. No real large orders coming in on the bid. You are seeing a few 100-share pops here and there. But look at that, 222-111. This is some serious unwinding in Robinhood traders, especially if they had bought at 1,700. Even if they only bought one share, if you think about it, let's say you had a $1,500 account, $2,000 account. Well, and you bought at 1,700. Well, you're now down $315. You just lost 15% on your account in a matter of days. So I'm not surprised. Okay, there was a decent size order through there. Decent size player in this one here. Where was it? There you go. 1,500. Okay, it's a decent size. So that's a professional trader. But yeah, all these single shares, Robinhood traders are unwinding in mass. I would be shocked to see if Robinhood traders decide to accumulate a lot of positions on this over today. It looks like the majority of it's unwinding, and it's a lot of mix of green and red. So you're not seeing like huge chunks of green, which would be large blocks of bids and buyers coming in. You're also not seeing huge chunks of red. Oh, there we had our first one. So, yeah, people are starting to dump positions on this right now. So we could easily see, again, the key number, the most important number, I think, is 13. Where was it? The most important overstock has already dumped a lot just in the last year. So this is it right here. If it loses 1310, then I think we're headed all the way down to 1079. So what's going on in ES is heading towards the lows. QQQ has broken through. So yeah, we're seeing a lot of unwinding happen right now. This is not the best time to be long stocks right now. So yeah. Simon, do you have a time frame and a one sentence description? Wow, nobody wants to participate. All right, well, if you guys don't want to participate, then I'll just roll on out. I can go have some breakfast. Yeah, about stock market, what capital would you recommend starting with? It's a good question. On the very low end, like the absolute low end would be around $500. And keep in mind that is going to limit the stocks you can trade, because you're not going to have a margin account or anything like that. Maybe some brokers will give you a margin account, but yeah, minimum $500 on the very, very low end. That's like absolute basement low. And that's going to restrict the stocks you can trade from, say, the $1 stocks to, $10 stocks. With those size stocks, you can still trade it in a decent amount of shares, but you're not going to be able to have lots of positions rolling at the same time. But it will allow you to participate, trade some stocks, and make some good money. If you're trading a stock that's $5 and you have $500, well, then you couldn't do 100 shares because that's going to eat up most of your account, basically. But you could do 10 shares, you could do 30 shares, you could do 50 shares. And if you did 50 shares and it gains $1, well, then you made $50. So you would have made 10% on your account. So yeah, you want to stick with small stocks if you can do that. The next size up would be around the $2,000 to $5,000 range. That gives you a little more, leeway in terms of stocks you can trade, number of shares. And then the next size up from there would be a $25,000 account, because then you're above the PDT rule. So yeah, good question. Oh, good. The chat has come alive. So do you have any advice trading penny stocks? Yeah. The best thing you can do is be in and out in the same day. Try not to hold. Try and avoid the lottery ticket trades where you buy stocks for cheap and then just hope it goes up to several dollars or something like that. Make sure that there are enough shares being traded. That's super important. So when you trade a penny stock, if you want to trade a penny stock for that day, you need to make sure that there's at least 500,000, a million shares being traded on that particular penny stock, because that will tell you there's enough volume, liquidity, and order flow to move the stock and for you to get in and out, and to kind of accelerate certain technical patterns. But I don't recommend holding penny stocks long term, unless you want to do a lottery ticket type play. You buy something for very cheap and you expect it to go up to several dollars, from 50 cents, $1, or something like that. But I don't recommend too many of that. I think your better bet is to day trade penny stocks, be in and out with the same day. Do not hold them overnight, basically. So yeah, good question. Is it possible to have a look at is that MHI1, the daily time frame? Today drops a lot. Current level of support, MHI1. Mini Hang Seng. Okay. Let's see. Do I need the one? No, I don't need it. I'll just. Okay. Mini Hang Seng. Yeah. Let's and you want to look at daily time frame. Okay. Let's do that. See, this is someone participating, right? I haven't looked at I haven't traded the Hang Seng in a while. Okay. So let's mark some levels here and see what's going on. Kind of a messy chart, not necessarily the best. You do have this kind of structure here, but you're talking of 1 or 2 days above and false break, and then just aggressive selling since then. So it's been selling since the 7th of July. The 20 MA is, or in this case, the VWAP is holding. So the VWAP's holding pullbacks. So dynamic resistance is holding pullbacks. Now that we're back inside the structure, it seems like there is, you kind of see, it's not the cleanest chart, but you can see that there is this base of resistance here. So I think if the Hang Seng gets below 24.5, 5.6, 5.8 or something like that, then it should put pressure on 24.04. And then this kind of series of lows here, 23.7. It's just going to kind of stair step down 23.32. And then, 22.7 to 22.4. But short term looks bearish. And volume has been steady across the selling. We're not seeing huge surges. Like there's a huge surge of buying activity as it sold off here. Combination of people being long and short, but look, there's really strong volume when it did bounce. So people were accumulating positions on this one, trying to buy long because they suspected it would rally. So, but here volume has just been steady during the sell-off. So it's just consistent, steady selling. Yeah, if it can get below this, then I think it's in trouble. Gary Coe, Dow Jones. Gary, good to see you. Dow Jones 15-minute potential 3P structure. So let's go to DJI. I have to switch to a 15-minute. Not really seeing it yet. It's got a lot more to go to. Yeah, not really seeing it yet, Gary. At H1 support. Yeah, this support, I see the support you're looking at. But yeah, it's got a lot more to form it basically. So yeah, not quite there yet. Can you please do a video about leverage and margin call on your channel? About margin call? Is there something specific you'd like me to cover? I mean, yeah, if there's something specific you'd like me to cover, then possibly there could be an interesting one on that. I've only had one margin call in the last 18 years, I think. One. And that was because of an option trade, but nothing crazy or anything like that. And even then it wasn't even that big a deal. XME. Oh yeah, you're holding longs on that. XME. So you want wrong 22.25. What time frame, Michelle? Okay, now we're getting some good questions rolling in here. So let's go back to 5 minutes on this one here. XME rolling over a little bit, but still got strength. If I wanted to add to an XME position, you could get aggressive. This is kind of an aggressive entry at 22.26. I like getting back around here, high 21s. Here's your clear basis support at 2040. It's very, very strong right here, which is the resistance. We bought this breakout, bought again, sold up here at the top. We missed the kind of bottoming here, but I think if it gets back to here, then I'd like to add to positions on XME. So yeah, that's where I'd like to get long on XME. In fact, I have alerts, as you can see, just waiting for it there. Yeah, I like XME a lot. It's playing on the precious metals boom right now. And it's not just gold and silver. It's all kinds of precious metals and mining. And miners haven't been able to keep up with the gold demand right now. So yeah, definitely. I definitely like being long XME. I think it's going to probably make its way back up to here. Then it's got a few spots of resistance, 24.29, this right here, 24.75. But I think if it can clear 25, then it opens up a lot at the top side. So yeah, definitely bullish on XME. Plus, I even think they have a dividend. It's not much, 1.71%, so decent dividend. So if you feel precious metals are going to hold, if gold is going to hold above 1,800, it's going to stay in the 1,800 to 2,000 range for the rest of the year, then having exposure to XME, to me, in my opinion, seems like a decent play, because as long as you get in a good cost basis, then you're going to not only make money in the direction, but you're also going to collect dividends on that over time. So very favorable play, in my opinion. Yeah, good chart. Yanni has a question. How can somebody do in and out in the same day if one is still doing set and forget? Just have targets that can be reached that day. That's it. Very, very simple. Yeah, just have targets that can be reached that day. So, targets that can be easily reached that day. You'd want to buy, early on in the session and then be out, before the session ends, basically. So yeah, good question. Eric Anderson, good to see you. Momo, I'm long at 25 daily time frame. Be patient and scale up. Momo. What is Momo? Huh. Long at 25. Momo, is this the stock you're talking about? I'm long at 25 daily time frame. I'm trying to see where and how you got long. Help me out, Eric. Help me out. Okay, so Eric, I'll come back to that just to make sure you got the right stock. Just let me know to confirm. High five, Tom. SLV, good. I think it's a good. I think this is a good thing to have exposure to. SLV daily, yeah, it looks very, very strong. I think silver, while gold has just been ripping, silver has been kind of consolidating. I don't know how I missed this break of this structure. I have no idea how I missed this. I even had alerts, and I don't know what happened. I should have been long on the break of this very, very easily. But let me look just sub daily time frame for a second. Yeah, this is pretty bullish. Like there's very little profit taking right now. I'd like to see a dip, on the minimum 2086, potentially even weekly VWAPs. I'll set an alert 2039, but I'd like to see a dip in silver to get long. Volume has been steady and then just building the last few days. So probably see a corrective pullback towards weekly VWAP. And then people want to step back in, but hard not to want to be long silver. If by some chance it pulls back to 1830, which I don't see happening anytime soon, but it could, that would be a fantastic area to get long. So just above these prior highs here, and of course 1768. But you might have to be a little impatient and buy exposure a little bit early in this one here. But silver is very, very good index. I don't think there's no dividend on this one here. But silver's got a lot of catching up to gold to do. And so I think, there is some resistance ahead here. You got current resistance, 2196. This double top right here, 2370, I think will probably be the next stopping point. So I think you got some ahead there. And then there's a lot of meat around 25 and a half. You just got a lot of meat right here. So then I think it could stall, and then it might give you a nice pullback to buy back, at current prices or a little bit lower if possible. But I think, if it can clear this, then I think you're headed to 2534. If it starts to clear 2534 and 2737, then it opens up a huge chunk of upside. While gold is back at the all-time highs, silver is really underappreciated right now. So I plan on adding exposure to silver for sure. Very, very good. Very, very good one, though. So high five to you on that one, Tom. Simon's come alive. All right. INTC daily time frame. Intel Corp. Oh, yeah, they had some bad news. Bad news overnight. There was delayed. Well, they had beat certain estimates, if I remember correctly, and the numbers were good. Their 7 nanometer chip production was delayed for a little bit. And I think, it was interesting that they beat estimates, they beat top and bottom line from what I remember, but yet just one of their chips coming out a little bit late and the stock just gets hammered. So let me see what's going on, ITD. Jesus, that's brutal. That is brutal. Yeah, I wouldn't want to touch Intel until, and even then I'd want to watch the price section. You have this good base of support between, you can see there's a lot of meat right here, which launched it higher. So this is the stock market, the coronavirus bottoms, and then everything bounced. Keep in mind, Intel did not make it to the prior highs, but there's some good meat of support, mid 45s down to mid 43s. I wouldn't touch it intraday right now. I do not. I wouldn't there's just so much momentum to the downside on this right now. Let's see what's going on. NTC. Did I have that right? Why did I not? There we go. And I'm on the wrong time frame. I mean, this is incredibly bearish. Massive selling. There is no buying in this, and there's no institutional players that are buying in this. They're all dumping at fire sale, sold off on the open. Yeah, we're at 50. We're at a round number right now, but there's some decent sized players coming on this. Very few Robinhood traders. So this is mostly professional retail traders based on the size. But yeah, I'm just not exactly excited about getting that right now. I'd like to see it stabilize here. Granted, it could stabilize at 50, being a round number and things like that. But there's just so much short-term bearish momentum on this right here. Do they offer a dividend? Okay, 2%. Yeah, I wouldn't want to add any longs till we get sub 50. This is a really, really good base of support. Yeah, so to me, sub 50 on that one there. Gap being filled. Yeah. I mean, why would you trade against such bearish momentum? That's the real question. Why, there's just so much bearish momentum right now. It seems like you're kind of lottery picking, just wanting to buy and expecting it to fill the gap. I mean, think about it. One daily gap has erased all of the gains since March 24th. Is that the most inspiring time to buy? It's not my play. It's not that it couldn't bounce at 50. If it's going to bounce, it's got to be 50. After that, then, maybe 48.50 because of this spike here, but there's a lot of meat inside here. So, if you really want to be a long player, I would look to start accumulating. In my opinion, I would look to start accumulating longs right around 46. But to me, I think this is just too risky right now. Who's going to, especially if it dumps so much, you might have some long-term players feeling like, hey, Intel's really cheap right now. That's a possibility. It might bring in some of that. But if the bearish pressure is on, then you're going to see a lot of people dumping their Intel holdings going into the weekend. And if you're already long, what if you had bought at 56? Do you really want to be holding right now? I mean, that's a lot of capital losses you're holding on to right now. So generally not my play. Stefano's deleted a bunch of messages. Thanks for your reply. Is very helpful to my questions. Cool. I'll hear it. Eric Henderson saying yes, the Tinder match of China. Been long since March. Oh, so it was Momo. Okay, so I have no idea. Information technology. Oh, okay. This is the Tinder. Oh, I'm not I don't see anything in the price action that is favorable. We had a bounce, roll over. It didn't hold at these highs, but it's just been aggressively cited, a few week rip, but then it's been holding off. And if you think about it like this, so this is the Corona market bottom. Now, a lot of stocks, especially tech stocks, have bounced and recovered their prior highs before the big sell-off. This hasn't gotten off the mat. This is a very weak bounce, weaker bounce, breakthrough, brief rally, but just a lot of selling since then. So, this is a stock I would put more into the weak category. If you think of stocks that have been strong, Tesla's been strong, Amazon's been strong, Microsoft's been strong. This stock hasn't gotten off the mat. In fact, it's even lower than it was at the coronavirus bottom where everything bounced. It's lower than that. So I couldn't say I'm really a fan of this stock. I wouldn't want to touch it. The next place, I would even consider touching it would be 1678. But right now, bearish pressure is on. It looks like it wants to head towards 1673. And then if it breaks that, okay, so there is decent base of support at 16.6 from this, and this. If it loses that, then this thing has got, it's headed, in my opinion, it's probably headed to 15 and much lower. So hasn't gotten off the mat for any reason. Not a technical picture I'd want to be getting long on. Yeah, good question. Salvatore Cosentino. Could Carnival be forming a bottom? The pressure is on the downside, but it seems is testing the pre-breakout structure it built in May. I think CCL is Carnival. Yeah. Do you have a time frame, Salvatore? So any stock you want me to look at, instrument, time frame. You did do your description analysis. I got that part. Okay, Tesla is trying to hold on. It's really trying. What's happening with QQQ? It's trying. They're all trying to hold. They are all trying to hold. YSSJC, good to see you. Hi, Sir Chris. Good to see you live again today. Can I ask not a non-stock market related question? Of course, no problem. Happy to. Salvatore has daily, weekly. Okay, so we're going to go for about another 10 minutes because I got a members webinar. I got at 8 o'clock Pacific, and I got to get some breakfast before then. So let's go for about another 10, 15 minutes. And then let's finish off what we have right now. So Salvatore wants a daily, weekly. Let's go weekly. So it's kind of the same thing. Hasn't gotten off the mat. It's hugging towards the lows because this is, CCL cruise lines are a entertainment type business. And considering the coronavirus situation is so fluid. So I did a whole thing on NCLH, which was Norwegian Cruise Lines. And all the cruise lines have basically suspended taking any sort of or doing any sort of cruises through all of September. And if we were to get a second wave, then it could be even further. So very, very fluid situation, and with that kind of fluidity and considering how dependent they are upon the market or the economy reopening and cruise lines being able to take passengers on again. If you think about a cruise, I've only been on 2 cruises in my life. And it was cool, but generally not my jam, but there were some fun parts of it. I will say, I love the casino on cruises being open 24 hours when you're outside of port, because the casino is it's like having your own market to trade every single day right in front of you, except it's 24 hours a day, and they serve you drinks, and you get to see the other players you're playing against. Like, that was awesome. I spent so much time in the casino when I was in a cruise. I was on the spa or I was in the casino like 80% of the time. Racked up like 5 pages of, they give you their itemized statement and everything. I racked up like 5 pages. Like, my mom had like 1 page, my dad had like 1 page, and I had like 5 pages of like drinks and all kinds of stuff that I ordered. It was ridiculous. Luckily, I had spent something like $3,000 just in like drinks and all kinds of stuff like that. And luckily I had made $4,000 at the casino. So I basically subsidized my entire casino tour for free by my winnings. Awesome time. Anyways, diverging from that. So cruise lines, tightly packed spaces, lots of people in them, very easy for people, if one person has it, for a lot of people to get contagious. It's just a super high risk event. And if you look at the people who often go on cruises, a lot of them are generally older people, more susceptible to COVID. So when I look at that situation, I am not interested in getting long cruise lines right now. Maybe if I felt like things were turning around with the coronavirus a little bit, maybe in this little zone right here, which is the lows. But again, think of all the stocks that have been strong and how they performed. They all rallied off the March lows and, got pretty close to the prior highs or surpassed the highs. So by investing in those stocks, I'd be investing in strength. If I invest in this stock, I'm investing in something that's remained weak while everything has been getting strong. So to me, that's challenging, to buy something that's weak. Basically, I'm buying something that doesn't have as many supportive underlying conditions, at least in the price action. The fundamentals aren't necessarily good. We haven't even seen Q2 results for the cruise lines yet. I'm sure they're going to be a bloodbath because they've had all expenses and no revenue. They haven't been able to take reservations because they don't know when they're going to reopen. So, it would be buying something that has weak internals, weak fundamentals, weak technical picture. So what would be the impetus to buy? It would be, well, the stock price is cheap and eventually it's going to rally. Okay, that's true. But if you're going to do so, then get it really cheap. And to me, I don't think 1479 is really cheap. I think these lows, between this 1113 and 772, I think that's a pretty good range to do that. If you really think the stock is a good buy at these prices, well, then instead of, buying shares outright, why don't you just buy a call? Volatility has been pretty low on cruise lines as of late. So if implied volatility is low, that means it's cheaper to buy an option right now. If you want to buy a call, it's cheaper. If you want to buy a put, it's cheaper. So instead of buying shares outright, you could buy a call on it. I'm sure they're pretty cheap. So if the pricing was good and implied volatility is low, you can control 100 shares of stock for every one contract, on-contract contract you do, for a lot less leverage. So you're using a lot less of your margin tying up. And, they wouldn't even have to be deep out of the money calls, So if the option's cheap, you could buy, a 15, 16, 17 call for, say December or something like that, hoping that in September, October, things start to reopen for cruises. So you can buy an end of year contract on that basically. And if it does open, October, then you could possibly see a rally in the stock. It's a very low cost way to get involved in the stock on that. So that would be a potential option. But for me, I wouldn't even consider touching it until this 11 to 7 range. So hopefully I answered your question. How much time we got? Okay, I got about 9 minutes. Tomorrow's okay, gotcha. Okay, so I answered Salvatore's question. Hopefully you got that. Bastiak was saying, "You're the best teacher out there." Thanks, Bassi. I appreciate it. It's very thoughtful. Simon saying, "Thanks a lot for your views. Really appreciate it. I'm glad I could help." Jonathan Nicholas, sorry, new member. Good to have you. Does Forex market get affected significantly by news like stocks do? Not quite as much, because if you think about a stock is a company. So there's a lot of things, it's not as big as a country. So there's a lot of things that can affect a stock. CEO having issues can affect a stock. Earnings, certain things going on, all those little things can affect a stock. A currency is based on, an entire country's economy. And there's so many things that go involved in that: flows, interest rates, all kinds of things. So for currencies, you have much more concentrated things that can affect the price of the currency. It's not as wide a range as, say, a stock could. With currencies, you have like a bunch of things that have minor influences on the currencies. You have some things that have big influences on the currency price. There's not a whole lot in between. So yeah, good question. Okay. Okay, so here we are. YSSJC. Finding your own personal edge is hard. I backtested several systems on 5 years historical data, but nothing seems to work. What should I do? How will I find my edge? Try not to focus so much on the system or strategy. Try and focus on the skills. So strategies come and go, especially fixed rule-based quantitative ones. Hedge funds average strategy is like 12 to 18 months, and then they have to recycle and build a new one. So, and those are for quantitative type strategies. So focus on skills, because skills never die. Strategies come and go, especially fixed rule-based quantitative ones. Skills never die. By focusing on skills, the core skills of price action, context, then that's going to not only give you a set of skills that will help you trade any market, any time frame. So you don't necessarily become reliant upon like these core fixed rules of a strategy that you're going to have to redo after a certain amount of time anyways. But it also helps you to hone in where are your strengths and weaknesses. For example, let's say I'm a quarterback in the American Football League. Okay, well, what are some of the core skills that a quarterback in American football would need? Well, they have to have a good arm. They have to be able to have good throwing mechanics. And to have good throwing mechanics, you're talking like wrist control, you're talking grip on the ball, you're talking like shoulder rotation, hip rotation, planting your feet right at these distances. And quarterbacks, those are just some core skills just to throw it, but they also have to have other skills. They have to be able to read the defense. They have to, potentially you could be a quarterback that has a really good arm. So you're going to be relying upon like massive power behind your throw. You may have reduced accuracy, but your throw be so powerful, it'll be hard for defenders to, get to it or to defend against it. You could be someone who is really good at reading defenses. So you could be throwing the ball to places that'll make it hard for defenders to get to it. You could have a quick release. Average release time of a quarterback from the moment they hike the ball is about 2.7 seconds. Well, if you could release in 2.5 or 2.3, you're getting it out faster than defenses have time to react. So by focusing on core skills, you're going to elevate your whole level. It's, when you focus on just a strategy, you're not elevating your whole level of skills. You're not elevating your game. You're just focused on one aspect of trading. But if you build up your core skills, well, then everything about your trading is going to get better, at least on a technical level. And eventually you'll feel like, oh, I have a high degree of confidence that I can read price action, or I can trade breakouts, or I can trade, I can find really good key support and resistance levels, or I can trade trends. By building up these skills, it'll help you have a set of skills that you can always use, you can always rely upon. I have skills that I can always rely upon. Maybe some of my strategies will change over the years, but the skills will always be there, and that will allow me to find opportunities in the market. So focus on skills. Try not to focus too much on the strategy or edge. The skill becomes your edge. Let the skill become your edge. And then that will allow you to build systems that are based on skills and based on you being able to find opportunities in the market. So, by gunning for the strategy, you're kind of without building the skills. That's a losing formula, in my opinion. You have to build the skills first. So hopefully answers your question. Okay. Dorito Dorm. VCBD. BD. What? Vitalibus. What are you? It's an OTC stock. Okay. Huh. Okay. Phytocannabinoid. Okay, so it's a marijuana stock. Okay. Oh, interesting. Okay. All right. BTCB on the brink of a technical breakout. Really? Where? I'm trying to. I mean, I see a corrective structure. I mean, if there's a breakout, yeah, it's this corrective structure, but it would be more of a breakout to the downside because you got these spikes here. So, yeah, I mean, we're only like, we're at 2 cents and not even a penny. So this is kind of a lottery ticket play if they happen to actually develop a really good product. I mean, you're talking, it's not even 2 cents. Is that? Yeah, it's not even 2 cents. Wow, it's like 0.2 cents. Wow. Okay. This is like, yeah. Wow. Okay. And what is average volume is 10 million. And right now it's 220K. It's Friday, so to be expected. I'm not bottom bounce plus low float multi-runner play. I mean, this is kind of a lottery ticket type play. So yeah, when I look at that, if you feel like, their technology and their product is going to be good, then, because it's so cheap, you're risking so little at this point. There's only upside. It is an OTC stock. So for an OTC stock, there could be many reasons why. Some OTC stocks have very low reporting requirements, which means that the accounting might not be accurate, anything like that. Other ones that are part of really big companies, they're most likely good accounting reporting practices, but they're just subsidiaries. This doesn't seem to be that. This just seems to be that company. So they need to, something needs to happen with their technology, their product, or something like that. It seems like a lottery type play, but considering how cheap it is, there's so little downside. So yeah, just my thoughts on that one there. High five. My sister and her 2 friends were on a cruise in January and all 3 of them got sick. Yeah. It's the thing about it. It's just such a huge risk. Salvatore saying, thank you, Chris. I appreciate it. Robert saying, great analogy. Cool. All right, cool. We've gone through all the questions. So why SSJC? Wow, I never expected that answer. I learned something new every time you go live. Thank you very much, Chris. I appreciate it. Hopefully it helped. Okay, we've gone through the questions. It is now 7:15. So I'm going to wrap this up. I'm going to go get some breakfast. I have a member webinar at 8 o'clock. So we'll be doing that. This was kind of a surprise one. I just wanted to do it. I won't be here next week. I'm going on vacation next week again. I had a weekend birthday vacation last weekend, and then we're going to take a little bit longer trip next week. So I'll be gone most of next week to close out the month. So I won't be here I'll do the Tuesday morning one for the pre-market live analysis, and then I won't be doing anything till the following week. But we got a video coming out later today. Sasha Gogoling, our course instructor, had a badass trade on pound dollar. So he's going to be sharing that trade, what strategy he used to get long, how he got long. He did a great analysis on that. So that's coming out in a few hours. Stay tuned for that one. And then we got some analysis coming out on Tesla coming out on Sunday. So stay tuned for that. Other than that, good luck trading to the end of this week. I think it's going to end a very interesting week. Tesla's trying to, not close below 1400. It's really working hard to do that. Same with QQQs. It's trying to not close because I think they know it'd be very bad. So, yeah, very, very interesting right now. So we'll see how these end up to the weeks. I think it's however the markets end up this week, especially if they end up red, that's going to put a lot of pressure on things. So we're going to see how this all plays out. But I think there's going to be some very, very good trade opportunities at the end of this week and to start the next week. So get ready for that. So have a great time, everyone. Good luck trading the rest of this weekend. like to learn more, check us out, secondskiesforex.com. Other than that, take care, everyone. Be well, stay positive, stay green, and I'll see you in the next one.